The Indian rupee just hit a number that's got everybody talking, and this isn't just about markets and charts. It's a story about global forces, big policy shifts, and the money in your pocket. Just look at this number 89.66. For the very first time, the rupee has fallen past the 89 per dollar mark. This isn't just another daily blip on the radar. This is a brand new all time low. So, the big question is how did we get here? And maybe more importantly, why should you care? Well, that's exactly what we are going to break down. The forces that caused this historic drop and what it actually means for you. First, let's just appreciate how fast all this happened. This wasn't some slow, gradual slide. This was a sudden, really dramatic plunge that took a lot of people by surprise. The rupee fell by 98 paise in a single trading session. That is the single biggest one-day fall we have seen in over 3 years. That's a huge move, and it tells you where there was a massive sudden shift in how the market was feeling. So, what caused it? The thing is, you can't point to just one culprit. It was more like a perfect economic storm, where a bunch of different factors, both global and local, all slammed together at the exact same time. First, the US dollar is getting really strong. And a big reason for that is that hopes for a rate cut from the US Federal Reserve are fading. Then you layer on all this uncertainty around the US India trade deal, plus the tariffs. All of this just creates this nervous risk off mood around the world where investors get spooked and start pulling their money out of places they see as risky, like emerging markets. Just this year, foreign investors have pulled a staggering $16.5 billion out of Indian stocks. When that much foreign money heads for the exits, it puts massive pressure on the rupee. It's simple supply and demand, really. This quote from an expert at Kodak Securities really hits the nail on the head. This fancy phrase, unwinding of risk trades, is just the technical way of saying that investors are cashing out of things they see as risky and running for safety. And right now, the number one safe place to be in the global economy is the US dollar. Now, here's where things get dramatic. For weeks, there was this invisible line in the sand that everyone was watching, a line that was being defended by India's central bank, the RBI. And then it just broke. You can think of that 88.80 level as like a defensive wall. The RBI was in the market actively buying up rupees to stop the exchange rate from crossing that line. It was a huge psychological barrier. But in the end, the pressure to sell the rupee just got to be too much. The wall couldn't hold, and this is where we see a really interesting strategy shift. The RBI basically changed its game plan. It moved from a hardline defense of one specific number to something they call calibrated intervention. So instead of burning through their cash reserves to protect that one level, they decided to let the market do its thing, stepping in only to smooth out the really wild swings. The RBI governor himself said it pretty clearly. This statement basically signals that the central bank's job isn't to fix the price anymore, but just to make sure the market doesn't get too chaotic. The final price? Well, that's up to supply and demand. Okay, so we have talked about the what and why. But what does a number flashing on a trader screen have to do with your everyday life? Well, this is where it gets personal. It's really like a chain reaction. A weaker rupee means India has to pay more for anything it imports. And that starts with crude oil. So fuel gets more expensive. Then higher fuel costs mean it costs more to transport everything from your vegetables to your online packages. And that pushes up prices across the board. Planning a trip abroad or paying for university overseas, yes, that just got a lot pricier. And if inflation stays high, your loan payments could stay high too. Let's make it even more real. The price of your next smartphone, it could go up because its parts are imported. Your weekly grocery bill might slowly creep up higher or creep up. Sending money to your family abroad, your rupees just don't buy as many dollars or pounds as they used to. Now, it's not all bad news. There is a silver lining for India's exporters like the big IT and pharma companies. For them, a weaker rupee makes their products cheaper for foreign buyers, which is actually a good thing. So is the rupee is in totally new territory. So the question is, where do we go from here? Let's see what the experts are thinking. Almost every analyst you talk to points to one major thing: the US India trade deal. All this uncertainty around it is just weighing everything down. A successful deal that brings some clarity and maybe gets rid of some tariffs, that is seen as the single biggest thing that could turn the rupee's luck around. And here it is, the question on everyone's mind: could it actually hit 90? Well, a lot of analysts are saying that if we don't get some good news soon, like that trade deal, then yes, the momentum could very well push the rupee toward that 90 per dollar mark. It's not some crazy unthinkable number anymore. At the end of the day, what this all really shows us is that a currency's value is so much more than just a number on a screen. It's a story. It's a story about global confidence, about trade, about how a decision made in Washington can affect the price you pay for gas in Mumbai. It's a powerful reminder of just how connected the world is.